Running a business in the United States offers opportunity, growth, and strong earning potential. But it also comes with risk. A lawsuit, property damage, cyber attack, or employee injury can threaten even a successful company. That is why business insurance is not optional protection. It is a financial safety net that helps your business survive unexpected events. In this guide, you will learn how business insurance quotes work, what affects pricing, how to compare quotes correctly, and how to get the best coverage without overpaying. What is a business insurance quote? A business insurance quote is an estimate of how much you will pay for coverage based on details about your company. Insurance providers calculate quotes using risk models that evaluate your industry, revenue, location, employee count, claims history, coverage limits, and deductibles. A quote typically includes the premium, coverage types, limits, exclusions, deductibles, and optional add-ons. Quotes are usually free and can be obtained online, through brokers, or directly from insurance companies. Why business insurance is essential. The United States has one of the most litigation-heavy business environments in the world. Companies can be sued for customer injuries, property damage, professional mistakes, contract disputes, or data breaches. Without insurance, a single lawsuit can cost tens or hundreds of thousands of dollars. Many claims each year involve small businesses with fewer than 50 employees. Insurance protects businesses by covering legal defense costs, paying settlements, replacing damaged assets, funding business interruption losses, and covering employee injuries. Main types of business insurance. General liability insurance covers bodily injury, property damage, and advertising claims. It is the most common starting policy. Professional liability insurance protects businesses that provide services or advice from claims of mistakes or negligence. Commercial property insurance covers buildings, equipment, inventory, and furniture against risks such as fire or theft. Workers' compensation insurance is required in most states if you have employees and covers medical expenses and lost wages for workplace injuries. Business interruption insurance replaces lost income if your company must temporarily close due to a covered event. Cyber liability insurance protects against data breaches, ransomware attacks, and digital liability risks. Commercial auto insurance is required if your company uses vehicles for business purposes. A business owner's policy combines liability and property coverage into one bundle that is often more affordable than buying separately. How insurers calculate quotes. Insurance companies determine premiums based on risk. Industry type is a major factor. Construction businesses usually pay more than consulting firms. Business size also matters because larger companies have more employees, higher revenue, and more assets. Location affects pricing due to local laws, crime rates, weather risks, and litigation trends. Higher coverage limits increase premiums. Higher deductibles usually lower premiums but increase out-of-pocket costs during claims. Businesses with prior claims often pay more because insurers see them as higher risk. Average business insurance costs in 2026. Typical monthly ranges vary by policy type. General liability often costs between $40 and $150. Professional liability ranges from $50 to $200. Workers' compensation may cost $70 to $300. Cyber insurance ranges from $60 to $250. Bundled business owner policies often range from $100 to $400 per month. Many small businesses pay roughly $500 to $3,000 per year for basic coverage. How to get business insurance quotes. There are three main methods. Online quote platforms provide instant estimates and are best for simple businesses. Insurance brokers compare multiple insurers and recommend customized coverage, making them ideal for complex businesses. Direct agents represent a single insurer and offer personalized service but fewer comparisons. A smart approach is to start online for pricing estimates and then confirm details with a broker. Information you need before requesting quotes. Prepare your business name, address, industry type, years in operation, annual revenue, payroll amount, employee count, equipment value, claims history, and desired coverage limits. Accurate information ensures realistic pricing and prevents surprises later. How to compare quotes properly. Always compare coverage, not just price. The cheapest policy may provide less protection. Review deductibles carefully because lower premiums can mean higher claim costs. Check exclusions to see what is not covered. Evaluate insurer reputation by looking at financial strength ratings and customer claim reviews. Bundling policies can reduce costs and simplify management. The best quote is not the cheapest. It is the one that offers the best value for your risk level. Ways to lower your premium. Businesses can reduce insurance costs by increasing deductibles, bundling policies, improving workplace safety, installing security systems, maintaining strong credit, avoiding unnecessary claims, and paying annually instead of monthly. Insurers reward businesses that demonstrate lower risk. Common mistakes to avoid. Many companies make costly mistakes when buying insurance. These include underestimating coverage needs, choosing the lowest price blindly, ignoring exclusions, providing inaccurate information, failing to update policies, and not comparing multiple quotes. How often you should request new quotes. Experts recommend reviewing quotes once per year or after major business changes. This includes revenue growth, hiring employees, moving locations, or expanding operations. Regular comparisons ensure you are not overpaying or underinsured. Emerging trends affecting pricing. Modern risks are reshaping insurance pricing. Businesses that handle customer data may pay more if cybersecurity protections are weak. Companies in hurricane, wildfire, or flood zones often face higher premiums. Insurers now use artificial intelligence to analyze risk more accurately and generate faster quotes. Some companies also offer usage-based pricing that adjusts premiums based on real-time business data. Understanding coverage limits. Quotes typically include two limits. The per occurrence limit is the maximum amount paid for a single claim. The aggregate limit is the maximum paid during the policy period. Choosing limits that are too low can leave your business exposed, while limits that are too high can unnecessarily increase premiums. Certificates of insurance. After purchasing coverage, you may receive a certificate of insurance. This document proves you have active insurance and is often required by clients, landlords, vendors, or licensing authorities. Final thoughts. Business insurance quotes are the foundation of smart risk management. They help you understand costs, compare options, and select protection tailored to your business. Whether you operate a startup, a growing company, or a large enterprise, the right insurance can determine whether your business survives a crisis. Instead of choosing the cheapest option, take time to compare coverage, evaluate insurers, and select the policy that provides the best long-term value. The right insurance is not just an expense. It is an investment in your company's stability, reputation, and future success. Disclaimer. This content is for informational purposes only and does not constitute financial, legal, or insurance advice. Insurance pricing, coverage, and requirements vary by provider, state, and business risk profile. Always consult a licensed insurance professional before purchasing a policy.